All right, let's dive into this earnings call transcript for Angel One, their Q2FY25. Lots of you sent this in, and yeah, it's pretty clear Angel One is making some big moves.
Oh yeah, definitely. It's like they're not content with just being a, broken app anymore. They want to be India's next big super app.
So this whole super app idea, what's the deal with that? What are they trying to do here?
Well, they want to be like the one-stop shop, right? For all your financial needs, like all in one platform.
So not just buying and selling stocks.
Exactly. Loans, insurance, mutual funds, everything. And get this, the way they're going about it is actually pretty smart. Instead of, trying to become experts in everything themselves, they're partnering with like specialists.
So are they more like a curator then?
Kind of, yeah, like a financial marketplace. Like, for personal loans, they've partnered up with 3 NBFCs.
NBFCs.
Non-banking financial companies. So they can offer loans right on the Angel One platform.
I see.
Yeah, it's pretty clever. They're using their existing user base, their tech, and basically becoming a distributor. Sort of like, if you think about it, what Amazon does, but for financial products.
Makes sense.
Yeah.
They're doing the same with fixed deposits, right? Partnering with banks and stuff to offer those too. I saw that in the transcript.
Exactly. It's all part of this bigger plan to grab, a bigger slice of the customer's wallet, be the go-to for everything money related.
It's a bold strategy for sure.
Yeah.
Ambitious. But is it actually working? I mean, are they seeing any results from all this?
Oh, yeah. The numbers are looking pretty good. Loan disbursements are up, and their mutual fund segment is, like, booming. Over 2.3 million unique SIP registrations this quarter.
SIPs, that's...
Systematic investment plans. Basically, people are putting their money in mutual funds regularly through Angel One. That's a lot of trust.
Yeah, for sure. Shows they're doing something right in terms of, keeping people engaged, not just one-time transactions.
Right. It's about building that whole ecosystem, the one-stop shop, managing your whole financial life. And their tech is a big part of that.
Yeah.
Using all that data, understanding the users, personalizing things, making it smooth.
That's the interesting part for me, this whole, finance meets tech thing. But they're not stopping there, right? The transcript also mentions expanding their reach geographically.
Oh, absolutely.
Yeah.
They want more market share. And a big chunk of that is going to come from attracting new clients, especially in, those tier 2 and 3 cities.
The ones that, traditional institutions have kind of overlooked.
Exactly. And that's where their digital-first approach is key, Their app, super mobile-friendly, works even with patchy internet. Perfect for these new investors, comfortable with tech, looking for something, easier and cheaper.
It's like they're shaping the future of finance in India.
Yeah.
But there's got to be some risk in all this, right? I mean, the transcript did mention some regulatory changes. It sounds like it could impact their revenue, especially with the derivatives.
Yeah. The SEBI, India's regulator, they've been changing things up, like contract sizes and expiry dates, partly to protect investors, but it does affect brokers like Angel One. They're estimating a 13-14% revenue hit per active client.
Oof. That's not nothing. So how are they going to deal with that?
Well, they're banking on their crazy customer acquisition rate to balance things out. Plus, they're really focused on client lifetime value. Keep those clients happy, even with some fee adjustments, and they'll stick around.
It's a long game. But what about the bottom line? Investing heavily in all this growth, but, are there concerns about profits in the short term?
Right. That's a big question. And it looks like they're walking a bit of a tightrope here, trying to balance growth and keeping those profits coming. They did mention exploring new revenue streams, like charging brokerage on those cash delivery orders, which they didn't before.
So Angel One is at a kind of a turning point, making bold moves, but with a lot of challenges ahead.
Exactly. It's going to be really interesting to see how they navigate all of this. Makes their story even more compelling, doesn't it?
For sure. So we've got their evolving business, ambitious future plans, and the risks they're facing. But let's dive deeper into their expansion strategy. Specifically, how are they winning over this new market? And how is tech playing a role?
Yeah, that's where things get really interesting. They're doing some pretty innovative stuff with, getting new customers and that whole user experience. Let's get into it.
3 million new clients this quarter. That's what they said in the call. That's huge.
It is. And it's crazy, 90% of those new clients, they're from those tier 2 and 3 cities, exactly who they're going after.
So they really are reaching that underserved market. What's their secret sauce? How are they pulling this off?
Well, their platform, first of all, it's so user-friendly. Designed for mobile first, which is key in these markets, right? Smartphones everywhere, but not necessarily easy access to, like, traditional banking or financial stuff.
So they're meeting them where they are.
Yeah.
Literally like right on their phones.
Yeah, exactly. And it's not just about access, it's making it easy to understand, too. They've put a lot of work into creating educational content, tools within the app, like guiding new investors, taking the mystery out of finance.
It's almost like a financial literacy boot camp built right in. Smart way to build trust, especially for those first-time investors, right? The ones who might be a little intimidated by the whole thing.
Totally. And they're taking it even further, using data analytics to personalize that whole experience. They're watching how people use the app, figuring out what they need, their risk tolerance, what their financial goals are, and then boom, recommendations for products and services that actually make sense for them.
So it's not a one-size-fits-all approach. It's very tailored.
Exactly. And it's not just about, like, throwing a bunch of stuff out there and seeing what sticks. This data, it's also how they manage risk. Remember that risk management scorecard we talked about?
Yeah. How does that work exactly? What data are they looking at?
Well, they're mixing it up. Traditional credit bureau data, sure. But then they're adding things like social media activity, online shopping habits, even, get this, mobile phone usage patterns.
Wow, really? So painting a fuller picture beyond just credit history.
Yeah, more complete picture. Especially important in those tier 2 and 3 cities where credit histories might not be as well established.
So win-win, right? Opens up access to credit for more people, and Angel One gets to manage that risk better. But it's not just all algorithms, right? They've been building up a team of relationship managers too.
Right. It's the best of both worlds. Technology plus the human touch. These relationship managers, they're there to guide users, answer questions, offer personalized advice. That extra layer of support can make a big difference for people, new to all this or just looking for a little more hand-holding.
A good balance. Scaling with tech, making things personal, but remembering that human connection is still important.
Totally. And they're always experimenting, trying new things. Like, remember when they were testing out different interest rates for that margin trading thing? It's all about using that data to make decisions, make changes on the fly. That agility is a real advantage in a market that's, moving this fast.
True. Got to be able to adapt.
Yeah.
Can't just set a course and never deviate. It's all about reading the signals, making those course corrections. So Angel One, they're really pushing the envelope here. But all this innovation, this growth, there's got to be some downsides, right?
Yeah.
Some challenges. We talked about regulations, but what else did they highlight in the call? What are the risks?
Well, one of the biggest risks when you're growing this fast is just, keeping up, scaling up operations, making sure the infrastructure, the processes, the customer service, it all keeps pace.
Building the plane as you fly it, right?
Kind of, yeah. And they know it. They talked about streamlining things, beefing up data security, making sure the technology can handle all the volume of transactions. It's not easy.
So they're aware of the growing pains and trying to stay ahead of them. That's good. But what about the competition? How do they stack up against, the big players like zero to up stocks?
They're really betting on this super app strategy being the thing that sets them apart. Other platforms might offer similar products, but Angel One wants to make it all seamless. One ecosystem, everything in one place. It's about convenience, personalization, that whole manage your entire financial life here kind of thing.
Appealing to that tech savvy generation,
Mm-hmm.
the mobile first folks. But it's not just about attracting them, it's keeping them, right?
Yeah.
Building that loyalty. How are they doing that?
Community is a big focus. They've got these investor education programs, workshops, even social features within the app, building a sense of belonging, They also really listen to feedback, using it to make things better.
Turning users into fans, building that shared experience. Clever. But let's not forget about, the big thing looming over all this. The regulatory changes and what that means for their revenue. We talked about derivatives, but there's also that true-to-label regulation SEBI brought in. What was that all about again?
Right. So it's all about transparency, making sure investors know exactly what they're paying for. Brokers have to show all the fees, all the charges up front. Makes it easier for investors to compare. And it's put pressure on some brokers who were, maybe not being so upfront about their fees before.
So how's Angel One handling this? Did they have to change their fees at all?
They did. They started charging brokerage on cash delivery orders, which they weren't doing before. Some people are not happy about it, worried it might make them less competitive.
Makes sense. So how are they justifying it? And how are they making sure they don't lose customers because of it?
Their argument is that, in the long run, this transparency is good for investors, even if it means some changes to the fees. They're hoping that all the other good stuff, like how easy the platform is to use, all the products they offer, the technology, that it'll outweigh any, small difference in price.
So banking on the overall value, not just the price tag.
Exactly. It's about the whole package, the education, the recommendations, the risk management, that community feeling. It's not just about being the cheapest, it's about being the best overall.
Bold move. Risky, too. Only time will tell if it works. But they're definitely trying to do things differently. This is all really fascinating. But before we wrap up, I wanted to go back to something we touched on earlier, that potential conflict serving both like the super cost-conscious folks and those who are looking for, more personalized financial advice. The high-touch clients. Seems like a tough balancing act. How are they going to handle that?
Yeah, that's a really good question. And honestly, they haven't really laid out a clear plan for that. They're still building up that wealth management side of the business, which is where those high-touch clients would be. Will be interesting to see how they, structure things, pricing models, all that to cater to both.
Almost like serving two different types of customers. The DIY investors who love the low fees, and then the folks who are willing to pay for that personalized guidance. Finding that balance, it's going to be crucial, I think, for their long-term success.
Absolutely. It'll take some careful planning, different marketing, maybe even separate platforms or service levels to really meet everyone's needs. It's a challenge a lot of financial companies are facing these days, trying to appeal to everyone.
So it's not just about the tech, it's understanding people too, right? How they think about money, how to build trust, set the right expectations, creating value that speaks to each group.
Yeah.
Which brings us to the last part of our deep dive. The risks. We've talked regulations, operational stuff, competition. What else could trip Angel One up? What are the other things to watch out for? Let's get into that in the final part of our deep dive. We've talked about all the stuff coming at them from outside, right? But what about internal risks? Anything in their own operations, their strategy that could, cause problems?
Well, one thing that jumps out is how much they're relying on partnerships, right? That's great for scaling up fast, offering lots of different products, but also means they're not in total control. A lot of the customer experience is actually in the hands of those third-party providers.
Yeah, that makes sense. What if one of those partners, I don't know, messes up?
Yeah.
Doesn't deliver. Or if they have a disagreement with Angel One about, strategy or pricing or whatever.
Exactly. You could have service interruptions, damage to their reputation, even legal battles. They need to have really solid contracts, really good oversight to make sure those partnerships work smoothly.
So it's more than just finding the right partners. It's about managing them over time. What else should we be looking out for?
Honestly, even that fast growth they're chasing, that can be a risk in itself. Sometimes when you grow too quickly, you lose focus, quality can slip. They have to be really careful to hold on to what's working, the technology, the user experience, the customer service. All that has to stay strong as they get bigger.
It's don't let success go to your head kind of thing. Easy to get carried away and forget what got you there in the first place.
Right. And they did mention this in the call, the importance of building a strong culture internally, investing in training for their employees, making sure their, systems can handle all the new demand. It's a lot to keep track of.
It's more than just adding customers. It's building something that lasts.
What about, the money part of it all? Any concerns about them actually making a profit and paying for all this growth?
Well, right now they're still pouring money in,
Right.
Investing heavily. Profit isn't the main goal at this point. It's about grabbing market share, getting those users. It's pretty common in the tech world.
But eventually they got to show investors they can actually make money, right?
Oh, for sure. And they did touch on this in the call, talking about, how they plan to make money from the platform. Transaction fees, subscription services, maybe even advertising at some point.
So lots of ideas, but no guarantee any of them will work out, right? Lots of competition. And who knows how, people will be using these things in a few years. It's a moving target.
Yep. Got to be adaptable, got to keep innovating. Plus, there's more and more regulation, which could make it harder to, make money from certain products or services. It's tough out there. It's they're juggling a lot here, right? Ambitious growth, but also got to make money, and then all these rules changing all the time. It's a tough act.
It really is. But they seem to have a good plan, a good team, and they're smart about using data. Definitely a company to keep an eye on, that's for sure.
All right, so the person who sent this transcript in, what's the key takeaway here? What should they be watching for as Angel One, keeps going?
I'd say the big things are those partnerships, how well they manage those, can they maintain quality and good service as they grow, and of course, can they balance growth with actually making money?
And of course, all those regulations, always changing. It's a wild market out there. Definitely going to be some surprises along the way. But Angel One is, they're making things interesting. That's for sure.
Definitely. Shaking things up, challenging the old way of doing things, whether they succeed or not, it's going to have a ripple effect, on the whole industry. So, yeah, worth watching for sure.
Absolutely a story to follow. So what do you think? What's the biggest challenge for Angel One in the next year? What's that next big, bold move they'll make? Think about that as you watch how things play out. Until next time, happy investing.